Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. Well, there has been an excellent inflow of FII money even yesterday, over 2,000 crores. But today, the Asian markets as well as, the Dow Jones indices, the Wall Street indices appear to take a breather. Since our liquidity flow has been very much a part of the global liquidity tidal wave, chances are, since Wall Street and Asia have taken a breather, India may follow suit. Maybe in this little bit of a pause that we are getting in the relentless rally we have seen over the last week, the bulls may also want to ponder about the numbers that came in yesterday from the January industrial output. They were quite a disaster at 1.7%. Capital goods growth was a contraction of -3%. Even consumer goods was just about 1.8 for durables and 3.8 for non-durables. So maybe this could kind of give a reason for the party to take a pause and then perhaps resume when things look a little more propitious. I mean, that's my best guess today. Morning, both of you.
Hi, Lata. Good morning. Hi, Anuj. Morning. And yesterday in late trade, we noticed that while the headline index was holding up, the mid-caps actually came off quite a bit from the highs. And this whole pocket of vulnerable stocks, whether it's PSU banks, some of these names like Ashok Leyland, Jet Airways, etc., ended in the red. What started with a 6:1 advanced decline ended with, barely about 1:1. Anuj, morning. We were discussing this yesterday in closing as to how it may be too late to enter this party now. But, this morning as well, Asian markets are under a lot of pressure. How do you approach trade today?
Yeah, morning, Sonia. This Saturday, I went to this place called Tamasha in Lower Parel. And, what I found out was that it looked quite good, quite excellent till about 11:30, 12. And then when the music stopped, then all of a sudden the AC stopped working.
It emptied out.
All of a sudden you wanted to, throw you out. So right now we are somewhere around 11 p.m., 11:30 p.m. in that party.
Okay.
So it's, I think, an hour to go perhaps in the party. Look, the basic thing is you need to trade the screen and not your view. You can be anything. If the market's giving you a message that it's going up, you have to trade it up. Just like it was giving 3 months back, you could argue about the valuation, but the market was just going down. That was the time to build portfolio, but be short from the trading point of view. This is the time to trade long, whether you want to, now start looking at lightening your portfolio. That's the call that you need to take. Also, at some point, while this global liquidity is clearly, pushing up prices, at some point you'll have to look at crude as a risk factor. We are at 67 now on Brent crude. If you start to cross 70, that risk factor would come back. And there was a phase in which Indian market had underperformed when crude had gone up to 70 and beyond. That's something to watch out for. The Nifty Bank is at new high. Nifty about 460 points away from highs. Let's see if we can get there. Like you rightly pointed out, first sign of distribution in mid caps yesterday. Though one day is not enough to change the view. What has happened is some old FI favorites have started to say big delivery buying. Yesterday, the biggest delivery buying was in IndusInd Bank. The kind of buying.
Even the HDFC Twins?
HDFC Twins obviously are the evergreen stocks, but some of the stocks making a comeback, like IndusInd, Bharti Airtel, Ultratech Cement for last many days. One factor which is quite interesting is the FI data in the FNO side. They've gone all in. There's 2,000 crores of buying in index futures. They added 30,000 longs and they shorted 45,000 puts. Now, this is a poker terminology, of course. You go all in when you believe that you have the best cards. 90% of the time, your intuition is right, but that 10% of the time when it's not right, you lose everything. So that's the risk factor. If you start to fall, perhaps these long positions, because the market is now net long, aggressively net long. So these long positions could come back against you, but that's not my base case. For now, I think the market's message is you got to buy the dips and have some hedges in place. That's the only way to trade this market now.
Okay. A fair point. I just want to point out that cash flows have been excellent. We just put that data out for you. But this is something that the market has already internalized. It's just that when you look at the data graphically, it gives you a better picture of how strong the flows have been. In February, of course, you have to add that big Kotak deal as well. But even then, even without it, it's about 7,000 crores that has come in. And why should you not count it? That's also foreign money that has come in. And then if you looked at March data, month to date, it has been another 10,000 crores. So we are crossing 20,000 crores almost reaching over $3 billion when it comes to February, when it comes to FII flows. But there has been a lot of DII selling as well, so neutralizing some of it.
Okay, well, this morning, Asia is under quite a bit of pressure, by the way. So the Japanese market is down over 300 points. The Hong Kong market is down about 250 points. Well, looks like these guys have exited the party for sure. But let's see how things progress. For now, the SGX Nifty is indicating a start in the red. Let's tell you what our wise experts have to say as we head into trade this morning. Neelkanth Mishra of Credit Suisse says despite a higher than expected reading, there is still downside risk to the MPC's inflation estimates for 2.8% for Q4 FY19. He says the first half of FY20 estimates of 3.2 to 3.4% are realistic, but the 3.9% for Q3 still seems high. He says as the economy slows due to financial system stress, core may also weaken.
Okay. Well, that's not something everybody in the market is going to believe. They believe 3.9 is an understatement, actually. And yesterday, after the inflation numbers, there were a lot of people believing that by the end of the year, you may have a 4% plus inflation. But money market views, this one comes from Pramit Brahmabat of Veracity. He says the rupee will have a range-bound move after a decent appreciation. He expects the trading range for the spot USD-INR pair to be 69.50 to 70.
And Dhaval Dalal of Edelweiss says sentiment in the bond market continues to improve amidst recent increase in the FPI inflows in bond and equity markets. The rupee's relative appreciation against the dollar in March has also enthused participants. Bond market participants expect a 25 basis points cut in the repo rate in early April. Edelweiss is turning bullish on 10-year bonds and 10-year AAA PSU and PFI bonds as they expect the bond yields to gradually trend lower in the medium term. He expects the new 10-year to trend towards 7.2 to 5% in the medium term.
Okay, let's go over to Sonal then for the world view.
Hi, good morning. And the big cue coming in from the global markets is Theresa May's Brexit deal getting rejected for the second time by an overwhelming majority. And now today, the MPs will decide whether they should leave the EU with a deal or without. So that is an important cue that we'll be watching out for. Let's talk about the markets then. US markets, they were largely mixed. Dow fell in trade. That is because Boeing shares, they saw a steep slide yet again. They were down around 6% However, S&P and NASDAQ, they were in the green. So Dow, that fell around 96 points, out of which 150 points were contributed by Boeing. Strip of that, Dow could have been in the positive. The gains in the S&P were led by the sectors like healthcare and utilities. Apple shares, they were also up by around 1%. In fact, the technology sector that has outperformed is up around 15% in this year itself. Let's talk about some macro data then. The US Consumer Price Index, that rose about 0.2%. That is absolutely in line with the expectations. Moving on to the European markets, they closed before the Brexit vote actually came in. They closed mixed actually. We saw gains of around 4 points on CAC, 20 points on FTSE. However, DAX closed in the red. Sterling nosedived in the afternoon session before the Brexit vote that came in, but it'll be important to see how these markets open now that the decision has come about. Asian markets, they are largely lower in trade today, as Sonia was talking about it. Nikkei is down around 300 points. Hang Seng also seeing cuts of around 185 odd points. So it's red on the screen as far as Asia is concerned. In fact, SGX Nifty is also indicating a tepid start to Indian trade. Back to you.
Okay, thank you very much for that, Sonal. And with that, let's invite an emerging market expert and someone who's watched India very closely, Adrian Moat, the EM equity strategist. Good morning, Adrian. Thank you very much for joining us today. Well, this has been a global liquidity tidal wave, and it's hit the Indian shores a little late, but hit it hard. Do you think there's more to go in this surge? We've seen $3 billion coming into India in the last 6 weeks or so.
I think it is likely. What we've got is a recovery in emerging markets, particularly the larger emerging markets such as China, Brazil. And as you see inflows into passive EM products, India will get its share of that. I also think that we had at the beginning of this year a rebalancing away from India. Last year, India was a significant outperformer. EM active funds were very overweight India going into 2019. And so part of that adjustment has also occurred. So yes, I do expect net foreign investment to continue to increase into the Indian equity markets.
Hi, good morning. So do you expect this gap to be bridged further, this Indian market performance versus the emerging market? This year we had underperformed, but in March the Indian market is the best performing market.
So remember that the Indian market was a significant outperformer in 2018. So what we saw in the first 2 months of this year was a recovery trade in other markets, which had fallen sharply, particularly the Chinese market. We're now into a sort of stage where we've moved beyond that recovery from the big sell-off in the fourth quarter. And it's going to be really a function of the underlying fundamentals of the different emerging markets. So I do expect the Chinese economic data to begin to improve, and that to continue to support that market. The Brazilian macro outlook is beginning to improve as well. And I think you have some optimism around South Africa. For a big move for Korea or Taiwan, then I think that's going to be a function of a conclusion of the trade negotiations between China and the United States. So I think there's a whole series of sort of very specific factors that are going to determine relative performance going forward. Now, there's nothing wrong with the sort of the economic outlook in India. If anything, I think, the most recent statistics for PMIs, particularly the new order PMI, which is very strong, combine that with no real inflationary pressure and a number of houses forecasting that the RBI cut the repo rates a number of times this year, then one should be, very sanguine about the economic outlook in India. But perhaps there's more delta in other markets which had a much more troubled time in 2018.
Adrian, hi, good morning. How much of this rally in India is due to the change in the political sentiment after the border tensions diffused? And once this big trigger, which is the elections, is out of the way, how do you think the Indian markets could move?
Yes, so I think the markets were pretty sanguine on the border dispute with Pakistan. So it didn't really have a significant effect on the market. And, when you talk to international investors, they have seen these tensions in the past, and it has tended not to have an economic impact and thus an impact on corporate earnings. So they tend to take it in their stride. So I think that's a long answer to the question. I think it's had a very little impact at all.
You'll be putting money to work now in the Indian markets. I mean, you have been bullish for a while, but what's the strategy now?
Yeah, so I have to say I'm still finding it easier to identify sort of stock opportunities outside India, where there's a better valuation story, and there's arguably a better cyclical recovery likely in those markets. So the probability of earnings upgrades in North Asia to me look higher than they do in India. We've got another year where the outlook for the next 12 months is 20% earnings growth out of India. The delivered was around 12% last year. I don't really see any reason why we don't get a repeat of some earnings downgrade in India, whereas I think there's a good chance of getting earnings upgrades in China. So what you're ending up with in India is still very much a sort of high-quality stock selection story rather than a strong sort of macro strategy story.
Oh, yes, we've got used to this, starting with 20 EPS growth and then bringing it down to single digits. I think it's happened for the past 5 years now. So a little difficult to believe the numbers till we actually see them. But Adrian, I want to ask you something altogether different. I mean, where's Brexit headed? Now, today, the Parliament has to vote whether they will exit without a deal or they will look for a deal. And then on Thursday, therefore, they have to look for an extension under A50. Will this have any impact on EMs, on this huge liquidity wave that anyway is sloshing around? Should we bother?
Yes. So the legislation as it stands has the United Kingdom leaving the European Union on the 20th unless Parliament pass new legislation. So there's a couple of potential votes this week which could involve delaying the Article 50 legislation. Although it's confusing at the moment because the current vote looks more advisory rather than a direct instruction to the government. So I think you're still running with a high probability of a hard Brexit because of this requirement for new legislation. And I think the markets are probably a little bit too sanguine around that outcome. And if you think about this with another big geopolitical issue, which is the China-US trade negotiations, you had Lighthizer, who's the chief trade representative of the United States, making comments overnight that they're very close to a deal, but there are still a few sticking points, and that the U.S. might walk away from a deal if they can't get those sticking points resolved. So I think we're in a high-risk period for geopolitical tensions and how they might impact risk perception in markets.
Okay. Well, if I can just scratch that point further, what is the conduit through which a hard Brexit will hit EMs? I mean, do you foresee a crash of the pound, a big jump in the dollar index, dollar skyrocketing and therefore hurting EM? What is the link?
Yeah, so I don't think you get a big move in the dollar index because sterling's weighting's not particularly high.
Okay.
I do think sterling could weaken from it's just above 130 to maybe the 120 level. I think it's more, people just taking a wait and see, what does this really mean? And you can get a modest correction in markets. Oh. There are some stock-specific issues here, and, particularly the Tata Group are very exposed to the disruption around Brexit. So I think it would probably come through stock-specific and a little bit of a sort of risk-off move after pretty decent year-to-date gains.
Oh yes, Tata Motors has been quite volatile. Adrian, so coming back to India and some market internals, this time the rally has been different because the broader markets have participated. Last time when we went to 11,000, it was all about IT stocks and a couple of other large caps. Do you reckon this move could continue, money being taken off IT and being put into banks and other stocks?
Yeah, I think the issue is, when you talk about this as being a broader move in the market, that's not really what is coming across, because you've got some financials that are down significantly year to date, whereas a few specific banks are up a lot. I don't view the move in the Indian market year to date as a broader move. There's a big dispersion of returns, which is quite different than what we're seeing in other markets where it has been a clearer move.
Stocks like auto stocks, cement stocks, would you buy them in India now?
I think that there's an argument for buying things like the two-wheelers on a hope that you get a boost to consumption around the election time. But beyond that, I don't see a strong argument for buying a Tata Motors or a Maruti at this point in time.
Okay, Adrian, we'll leave it at that. Thank you so much for joining us and giving us your view. The expectation is that there will be more FII flows into the Indian markets, and valuations are also looking pretty good at the moment.